Welcome back to Rekt Radio, the one and only show where we watch the world's financial system get rewritten in real time. I'm Sunny, and folks, the dominoes of adoption are starting to fall, and it's a beautiful, beautiful sound.
And I'm Cole, here to remind you that the sound of falling dominoes is usually followed by the last one crashing into a pile of dust. What you call adoption, I call setting up for a chain reaction of failure. Let's get into it before the whole thing collapses.
It's not a collapse, Cole, it's a construction, and the biggest builders in the world are adding our bricks to their foundations. I'm talking about the S&P 500. Block, the company run by Jack Dorsey, is officially being added to the index. This is monumental.
Monumental? Sonny, it's one company joining a list of 500. Let's not start planning a victory parade just yet. They're being added because they're a large, successful payment company, not because they hold a bit of Bitcoin on the side. This is a footnote, not the headline.
You're missing the Trojan Horse aspect of this. Think about it. Every single pension fund, every 401k, every passive index fund that tracks the S&P 500 will now be forced to buy Block stock. That means, indirectly, hundreds of billions, if not trillions of dollars in managed capital will now have exposure to a company whose corporate strategy is explicitly tied to Bitcoin. It's a quiet, systemic injection of Bitcoin into the heart of the traditional financial world. It's adoption by default.
It's contamination by default. You're celebrating the fact that the most stable, boring investment vehicles in the world are now being tied to the most volatile asset class on the planet. What happens when Bitcoin has one of its classic 30% drawdowns? Block stock will get hammered, and every S&P 500 fund will automatically start selling it off, creating even more downward pressure. You've just given the traditional finance machine a new lever to inadvertently wreck the crypto market. It's not a one-way street of adoption. It's a two-way highway for volatility.
It's a two-way highway of legitimacy. It forces the big money managers to have an opinion on Bitcoin. They can't just ignore it anymore. When they analyze Block, they have to analyze its Bitcoin treasury strategy. It puts Bitcoin on the agenda in every major boardroom. This is how you normalize it, Cole. You weave it into the very fabric of the establishment until it's just normal.
You weave a thread of dynamite into the fabric and call it progress. They're not normalizing it. They're just taking on a new, unquantifiable risk they don't understand. And speaking of things people don't understand, let's talk about the myth of crypto anonymity.
I'm so glad you brought this up, because the myth was just busted in the most spectacular, bullish way possible. Law enforcement just arrested Intel Broker, one of the most notorious hackers out there, who was responsible for some massive data breaches. And how did they get him? By tracing his Bitcoin transactions.
So you're cheering for the death of privacy?
I am cheering for the death of the crypto is only for criminals narrative. This is the ultimate proof that the blockchain is not some shadowy, untraceable abyss. It's a public ledger, a transparent, immutable public ledger. And the good guys are getting incredibly sophisticated at using it to catch the bad guys. This is a huge win. It cleans up the space, builds trust, and makes the entire ecosystem safer for everyone. Every time a story like this comes out, it dismantles the FUD and makes it easier for the next wave of users to join.
You see a win for safety, I see a terrifying precedent. They didn't just catch one bad guy, they proved a concept. They proved that with enough resources, any government or corporation can track, analyze, and ultimately de-anonymize transactions on the network. The whole point of Bitcoin, the cypherpunk ideal, was to create a peer-to-peer electronic cash system outside the control and surveillance of the state. This story is a celebration of the fact that Bitcoin has failed in that mission. It has become a surveillance tool that would make a dictator blush.
That is such a cynical take. It's not a surveillance tool, it's an accountability tool. If you are a criminal using it for illicit purposes, you will be caught. If you are a regular person using it to store value or transact freely, you have nothing to worry about. This is a feature, not a bug. It separates the legitimate use cases from the criminal ones. You can't have a global financial system that's also a perfect black box for criminals. It doesn't work. This is maturity, Cole.
It's a leash, Sonny. They're telling you that you can play in their new digital sandbox, but they're watching every grain of sand you move. It kills the very soul of the movement. The promise was financial freedom, not just a more efficient way for the authorities to monitor your every move. It's a betrayal of the core principles. But I know, when the philosophy gets too messy for you, you like to retreat to the comfort of your charts. What are the technicals telling you today?
They're telling me that the philosophy of price go up is alive and well. I've got the daily technicals from TradingView pulled up, and it's a textbook picture of strength. The overall summary after crunching all the numbers is a clear buy.
A buy? How wonderfully simplistic. What are the components of that buy signal telling you? Are they all in agreement, or is there some dissent in the ranks?
It's the best kind of signal. The moving averages, which measure the deep, powerful underlying trend, are flashing a strong buy. That's the freight train of capital, Cole, and it is moving in one direction. It shows that over the long term, the conviction is solid.
The long term, yes, the rear view mirror. What about the dashboard? What about the indicators that measure what's happening right now? Let me guess, the oscillators?
The oscillators are sitting at a perfect neutral, and that's what makes this so incredibly bullish. They aren't overbought, they aren't speculative or frothy. It shows the market is calm, collected, and not overextended.
It shows the market has stalled, Sonny. You have a massive divergence. The moving averages, your lagging indicators, are telling you about the momentum we used to have. But the oscillators, the real-time gauges, are telling you we're out of fuel. The buying pressure has vanished. The engine has cut out. You're cheering for the fact that a car is coasting silently, convincing yourself it's about to launch into orbit when it's actually about to roll to a dead stop.
It's not a stall, it's a pit stop. It is the definition of a healthy consolidation. The long-term strong buy tells you the trend is intact. The neutral short-term reading tells you we've shaken out the weak hands and are now building a stable base for the next incredible launch higher. It's a coiled spring. It's strength, not exhaustion. It's the calm before the next storm of green candles.
It's the eerie silence before a market breakdown. That neutral reading is a warning sign that the bulls have run out of steam and the best they can do is hold the line. That's not a launch pad, Sonny. That is a stalemate, right at the edge of a cliff. And stalemates rarely resolve in the bull's favor when the momentum is gone.
That's all for this episode of Rekt Radio. I'll be watching that coiled spring send us to new all-time highs. The big picture is clear, and the institutions are coming. Stay bullish.
And I'll be waiting for that stalemate to break downwards. Don't mistake a lack of momentum for stability. Be careful out there. You've been listening to Rekt Radio.